Hey traders, welcome to Charts and Coffee. Happy Monday, everybody. It's daylight savings, so I'm getting that amazing crazy light coming through the window here. The lighting team was not here to do the lighting and the hair and makeup, but we will soldier on anyway. Hope everyone is doing well. We are waking up to a couple things, which I want to walk everyone through here. 1 minute after 9 a.m. Eastern. So from our March contract that we've been trading all year long, the March S&P, NASDAQ, Dow, Russell, the March futures contract, 1 week, typically the Friday before, 1 week before the expiration, which is, by the way, this Friday. So we have those quarterly witching this Friday. We'll do what I used to call a pit date. It's when the pit would roll from one contract to the next. So the front month changes. They're called roll dates. And the Chicago Mercantile Exchange has all these dates. They're pre-planned. You can, if you Google CME roll date, they'll give you this little chart of all the roll dates for the different contracts. So we're in this roll date now. Now, what's interesting is when I go from the ESH, and so a lot of folks ask me, Rag, is the roll bullish, right? Overall, is the roll bullish? And I'm going to show you what we're looking at right here on the ESH. So this is the March contract, which is trading at 5109.5. If you're using a continuous contract like I use, you'll notice whether or not your broker has rolled. Not all brokers will roll until the end of the contract. So some brokers will wait till later this week before they roll into M. Now, the 51.10 and a quarter, 51.09, whatever it is we're at right now, now we're going to roll out to June. See, it's 51.73. And while we are trading lower, right, today we are seeing the S&P lower, it's hard to call this bearish, right? Because the contract that ends in March, the way in which futures work is when the contract ends, we're making a bet, if you will, on what the value of the S&P or the NASDAQ or the Dow or crude oil, you name it, bonds, gold, what are they going to be worth when the contract ends? That's how futures contracts work. Okay, so now the June contract is higher than the March, which is typical. It's unusual for a contract further out in expiration to be worth less. Although when it is, there's a name for it, it's called backwardation, and that's a whole other thing. That's where traders and investors are thinking, ooh, whatever this is going to be worth less in the future than it is right now, which is unusual. So it's not weird to see that we're viewing a June contract, which is higher in value. But it is, which generally means this is bullish. And it's not just a little bit higher in value. As you can see, it's about 50 points higher in value, actually more than that, about 60 points higher in value. So the optimism continues as we move through the year, because there's still expectation that we're going to get, rate cuts come June, and that we might get up to 3, maybe 4 quarter-point rate cuts by the time the year ends. So keep in mind, we have the expiration of the futures contracts this Friday, which also means, along with the typical third Friday of the month options expiration, which is every month, right? Third Friday of the month, we have the futures on top of it, which is why they start calling it triple witching and quadruple witching and all these witches. It just means lots of things are expiring. We're going to have lots of volatility. And this is once a quarter. Now, in terms of the overall movement higher, to me, when I'm looking at bonds, that roll from March to June was a big one to look at. Anything, I'm just looking at the way in which it seems the trend is continuing or not, right? Is the trend continuing higher or not? That's really it. Backwardation, for those of you wondering, gosh, can something actually be worth or expected to be worth less in the future? It's not unusual to have seen crude. For those of you that have been trading crude oil for a while, it's not unusual to see some commodities with that, right? It's not common, but it's not unusual. And why is that? Generally, it's really simple, gang. Let's just keep this super simple. The uncertainty of the future has a premium. It has a cost, right? So if I'm saying that, hey, I'm going to give you corn at a certain price in December, I'm going to charge a certain premium because there's a lot of time between March and December. And simply that chasm between today and sometime in the future where I have guaranteed not only a certain price, but delivery of bushels or ounces or whatever it is, there's a premium built into delivering something in the future, unless there's so much certainty that there is no demand for this thing in the future, or the value of this thing will be less. So keep in mind, let's not make it overcomplicated. And that's all I'm gonna really have to focus on with roll. Now, what about rollover gaps? Okay, that's the next thing that happens when we roll from one contract to the next. Do gaps tend to close on rollover? Well, pretty simple. Go back to the last one and the last one and the last one. Here's the March. Here's the March, right? This was December to March. We didn't close this gap, right? Now, we could, but I do want everyone to remember, rollover gaps do not have to be closed. Here's a perfect example as we rolled from the Z contract to the H contract, December to March, and you can see the hole in the chart right there. How about we go back a little further? And here is the contract roll from September, the U contract, to the December contract. And that one did not only close, but we ended up with a lot of chop through Q, as you can see here, Q3 into Q4, in that roll. Okay, so that's not too complicated, right? So gaps don't have to close. They can, right? But they don't have to. And do they have to close? Meaning, where was the close on Friday, and where is Monday's close going to be? And does the chasm between today's open, Monday's open, and Friday's close, does that chasm get closed? Like a window getting shut. All right. And that's really it. That's really it. So that's probably the most obvious thing that you're probably seeing pop up on your charts today, is that rollover gap. And again, if you're wondering, why is it rolling now? It doesn't expire till Friday. The reason for the roll now is the fact that, again, you'll already see the volume and the open interest migrating slowly to the next contract, in this case to the M contract. And then, like I said, it ends on Friday. All right. So again, just check your brokerage. Most will roll, some may not. But if you see a major difference between what's happening, say on one chart versus another, that might account for it. All right, so let's talk a little bit about what else we have going on this morning and, frankly, this week. So I'm going to jump on over to the calendar, and of course, daylight savings. So we've shifted in North America. We don't shift globally. Everyone knows that. So we're going to have a funny chasm that's not normal between Europe and the US. Monday is pretty quiet. You can see here Monday, March 11, they've taken some pity on us. We're not going to get bombarded by a bunch of hot zones this morning. That doesn't mean it's going to be quiet all week. We go right into core CPI tomorrow. Could there be a little bit of wait and see with the CPI? While not the PCE, core CPI is pretty darn important, because CPI is the main, it's gonna look at the main metric the Fed is using to decide whether or not they're going to cut rates, and that's inflation. While not the PCE, certainly one we need to watch. And then we roll into Wednesday. Got some bond auctions throughout the week. Pretty quiet Wednesday. We roll into PPI on Thursday, which is still a pretty impactful hot zone. And then on Friday, we have the Empire State Manufacturing Index at 8:30, and then the preliminary University of Michigan inflation expectation. I'm not as concerned with the consumer sentiment number. It's really right back to, what is the Federal Reserve looking at? What are the metrics we can use to understand what's happening with inflation? And that's exactly what we're going to focus on, that inflation metric. 2 of them this week. Actually, technically 3, because PPI would definitely be in that column of inflation. All right, that's the week coming at us. First question is, how do you set up a stop loss after buying at support? Do I look at previous swing lows? Partly. Line Watcher will use also a percentage of premium paid. Next question. It's so refreshing to listen to my podcast about the market again. I took a year-long break and just now slowly getting back into trading. Cool. It's no harm in ever taking a break. What are my thoughts on PLTR? It's in a fresh uptrend, Araz. And RDFN. RDFN's heading lower. PLTR is heading higher. I would focus on buy the dips and PLTR. Unless you're looking for shorts, in which case, long puts, in which case RDFN would be the way to go. All right. Next up, Larry asks, isn't the higher value of the next futures contract not due to the cost of money? Interest rates are expected to be falling by June, Larry, so I would say no. If we look at the market on a daily basis, why isn't it bearish? Next question. If you're watching this show at all, gang, my gosh, if you have a bearish take, cool. No, there's nothing bearish about the overall markets right now. And thinking that is costing money. So anyways, Pitbull low today or tomorrow? Pitbull low. All right. So Dave, I have a tiny shift in the window. So Pitbull lows, for those of you that are not familiar with the terminology, it comes from Marty Schwartz. From his nickname was the Pitbull, and he had a write-up in Market Wizards where this initial idea got popularized, and he's a rather famous trader from way back. So there is this notion that Friday to Monday is typically kind of a low gets put in at the week before options expiration. The week before options expiration. So keep in mind that the week before options expiration, is it Wednesday, is it Thursday, is it Friday? Pitbull low is more of a Friday to Monday. But I've noticed sometimes we'll start to put in lows somewhere between Monday and Friday. It's a tendency, Dave. It's not something we set our watches to or set our calendars. I mean, I don't have Pitbull low on the calendar sitting next to me here in the office. Ultimately, what we want to remember is that tendencies are not trades. There is a tendency for that low to be put in, but there's so many other catalysts for buying or selling between now and then, right? But let's take a look. So last Wednesday, if I'm looking at this low being put in between Wednesday and Friday, last Wednesday would have been the 6th, right? So here's the 6th. We've been making lower highs, right? I mean, let's take a look. Here's the lowest low of the week, and actually the lowest low for quite some time, other than when we shot up at the end of February, to the lowest low for March. That was on the 5th. We made a higher low on the 6th. We made a higher high and a higher low, but barely, on the 7th. And we've made a higher high and a higher low on the 8th. I mean, the stream of higher highs and higher lows is actually a very basic definition of an uptrend. And even though we've rolled, if you take a look at where that candle sits, once again, a higher high and a higher low. And this has been the way of the year, gang. This has been the way of the year. I don't dismiss bearish questions because I have long positions and I don't want to hear about it. I'm dismissing bearish questions because they're misplaced and they've been wrong for a really long time, except if, traders think that the 5th is a trading opportunity, or that, for example, the 13th is a trading opportunity. Gang, which way is the market going? And if you don't agree with that, great. Turn the channel off. Easy peasy, right? But if you take a look at the data, there it is, right? So yeah, we could definitely say, Dave, yeah, thank you for the question. I think we could definitely say between the 6th and the 8th, Wednesday, Thursday, Friday, we've certainly put in that string of higher highs and higher lows. All right. So normally it's a Thursday, Friday. I think traditionally it's Friday. I like to start looking based on Wednesday. So again, not a hard and fast rule on that. Does it get me long? Not necessarily. The overall uptrend is what gets me long. All right. Thoughts on Costco? Joshua, yes. So if I take a look at Costco all year long, we're heading higher. All year long, we've got the bullishness. And then here comes earnings. Does everyone know here that I hate earnings season? I'm pretty unapologetic about it because it's just become this spectacle of reaction to revenue and earnings per share, and it creates volatility that need not be. However, on the flip side, it has created some interesting opportunities to get bullish in the wake of these over-exaggerated responses to a single quarter of earnings and revenue. All right, if we take a look at where we are right now, that's a mean reversion. So when I look at an overall uptrend, trading down to the 34, that is my magic number. It has been since I've been a teenager. that is where I want to be looking for mean reversions. However, that is a candle of unusual size. Yes, absolute homage to rodents of unusual size from Princess Bride. That is a candle of unusual size. That is a big gap. I don't want to be first. I don't want to be alone in the trade. It doesn't work, right? We're never alone in a trade that works, are we? So the idea here is, let's see how today responds to Friday's sell-off. Let's take a look at whether or not we can plot a minor low or an inside day, and in which case we can look for a buy. I really need to see how we respond today, right? I really need to see how we respond today. All right, next up, I was in ARM. What is the, yeah, hey, JCW, no knock to you. What is the deal with ARM? I hear people talking about this a lot. Is it because it did one of these? It gapped up? Yeah. I have really nothing to add to this. I have no skin in the game. So here's, maybe I'm salty this morning. Yeah, maybe. I love the question. Thank you, JCW. Was this a trend going into earnings? Yes. It was a very boring trend, but it was a trend going into earnings. That means that any of the mean reversions, any of the tests of the Darvis are buyable, and that's been since the end of November to about the beginning of January. After that, things got a little choppy. Bullish choppy, but choppy, right? Because I lost structure of the green, consistency in the lower row of these colors, my multi-trend. All right. So when I look at the structure, right? When I look at the structure, I've got to be bullish. The only way for me to be positioned into something like this is to be already positioned. If I'm getting to this chart because of the gap, to me, that's after a lot of attention and explosion and buying has already happened. I won't touch stocks like this. Yeah. So JCW, I'm sure some people like to trade this stuff. That's not, I trade boring things like GE that I look at day in and day out. So the best advice I could give anybody, just give myself and take from it what you will. Please don't chase whatever stock du jour is being talked about, right? ARM is one of those things that had a big earnings and off it goes and it's on everyone's radar, right? How about looking at the same 20, 30, 40 stocks every day? And how about even further, those 20, 30, 40 stocks are stocks that are heavily weighted within the sectors and within the indices that we look at every single day. So that adds consistency to the names you're looking at. It is a whole lot easier to catch moves in things that we've done in the mastery, like American Express and SMH and GE and Disney, all very common names, right? Because they're all weighted within the sectors and the indices that we look at every day. It's a whole lot easier to trade these names because we're watching them every day. We're not catching them after a big move. So Disney was something we were trading before earnings, and it's something we've been trading after earnings too. So a lot of times the challenges that a lot of us run into, I ran into them too, in trading come from not having a consistent set of symbols. The advancements in charting allow us to have a watch list of easily 40, 50 symbols and get through them with relative ease without having to focus on what's moving up today, what's gapping up today. And that, I'm not saying that's at all what you were doing, my friend. Not at all am I saying that. But if you're in from the beginning, and that's great, that means it's on your list in a regular way. Fantastic, right? Then you know what to do. You've been watching that thing move higher. And you've benefited from the move overall higher. So ultimately, my success and consistency has come from looking at the same groups of stocks and the same group of sectors as they are moving with the S&P, the NASDAQ, and the Dow, which is why I've been saying for weeks, if not months now, please focus on financials. Please focus on industrials. We don't have to trade tech. We don't have to hitch our wagon to NVIDIA every single day. Those kinds of things. There are great trends that are happening in the indices because sectors within them are moving higher. So yeah, thank you so much for the question. Yeah, that's definitely just a different way of approaching. And it's not the wrong way. I just can't find consistency in that way. I haven't been able to find that I can grow an account in that way. And gang, I know this seems obvious, so I'm going to leave you all with this idea. I don't have it running right now. I'll bring it up later on this week. But ultimately, one of the things that I want to mention is that if you are looking at the stocks on your watch list and they're changing every day or changing every week in a substantial way, that's going to present problems, right? That's going to present a lot of challenges in terms of being able to find the trend as it's brewing and then play the dips, right? You'll usually be relegated to catching it after the move. So just think about that. And that's definitely something I would recommend because it's worked for me, right? So take with it from you will. And I'll see you tomorrow, same time, same station. Be good to each other, gang. Until then.